As we all know, dark clouds hint at a coming storm. The dark cloud candlestick formation does the same thing for prices. The pattern consists of two candles, which follow in advance. The first is a strong, real white body. The second is a black body, which opens higher than the high of the previous candle. Equally as important is the fact that the close of the black candle falls in the lower half of the previous white candle's real body. You can tell that the black candle opens higher by making sure the top of its real body is above the first candle's upper shadow line. This means the opening of the second candle gaps higher than the trading range of the first candle, implying an emotionally bullish opening. However, by the end of the candle, the price closes well into the trading range of the previous session, leading to great disappointment among the bulls, as it closes below the halfway point of the previous real body. Generally speaking, the lower the close on the second candle relative to the real body of the first, the more bearish the pattern. Another characteristic that would emphasize the bearishness of one of these formations would develop if the second candle opens above a key resistance level and then crosses below it. This would then indicate exhaustion, a phenomenon that's usually followed by a sharp decline. The resistance could take the form of an actual level, as in this example, a moving average crossover, or an up or down trend line violation, and so forth. The point is that the price tries to rally above the resistance, but not only fails, but fails convincingly by forming a dark cloud cover pattern. Another tip-off that a reversal is in the cards develops when the second candle is accompanied with very high volume. This is because the greater the level of activity relative to the recent past, the greater the significance of the pattern. Finally, if the two candles forming the pattern are both shaven, that is, with very little or no shadows, this increases the odds of the validity of the pattern. The piercing line occurs at market bottoms and is exactly the opposite of the dark cloud. For this reason, it could be more aptly termed a sunny sky. The first candle is a strong black real body, and the second is a white real body, which closes in the top half of the first candle's real body. The more the price can close above the midpoint, the more positive the implication. Again, it's important for the opening price of the second candle to gap completely beyond the first candle's real body, as we see here from the green rectangle. The principles determining the significance of dark clouds appear to piercing lines but in reverse. Thus, if the second candle opens below a major support level and then meets the other qualifications of this pattern, it indicates downside exhaustion. Also, if the second candle is accompanied by exceptionally heavy volume, this suggests the form of selling climax. One thing to bear in mind with the piercing line versus the dark cloud is the fact that it's more important for the second candle to close well into the top half of the first. It would appear that prices can fall from their own weight, but require stronger momentum to rally.